Hello, my name is Alora Harper, and today I will be presenting Target's financial analysis for the financial analysis presentation assignment. Today's presentation, I will be giving a little insight on Target Corporation. I will discuss the company income by reviewing major sources and trends. I will then touch on Target's cash flow trends by reviewing the three major categories. The ratio analysis slide, I will review Target's ratios compared to its competitors while discussing each category. Next, I will be talking about the market valuation of Target Corporation and its strengths and weaknesses as a company compared to its competitors and its plan for the future. Lastly, I will be discussing Target's financial position and organizational strategy from a biblical aspect. Now that I have given a brief overview of what this presentation will discuss, I will now talk a little bit about Target as a company. Target is one of the largest department stores in the United States and is known for its bright red Target symbol. They have stores located in every state and can be seen in basically every major city across the country. Target offers a variety of products which include food and beverages, home decor, apparel for all ages and genders, baby, beauty, supplies, electronics, kitchen and dining, as well as patio and garden. Every organization has competitors within their market, so for this presentation, we can see that Target's major competitors are Walmart, Amazon, and Costco. For the purpose of this discussion, I will be reviewing Walmart and Amazon in comparison to Target's finances. Target's primary audience are people between the ages of 18 and 44, so they focus most of their products to appeal to their target audience. Now that I've given a brief introduction on Target as a company, I will be reviewing Target's income statement. These next few slides will be discussing Target's source of income and quality of earnings. Let's talk about Target's income. Target's income in fiscal year 20 was $78 billion, and as can be seen in this screenshot below, steadily increasing by about $20 billion each year to 2022 of $106 billion. Its primary source of income can be seen in the cost of sales and general and administrative sales, as that category has the highest revenue. To continue its growth, Target has opened new locations and focused on selling brand merchandise to Target's audiences such as beauty and household essentials. Now that we've gone over the introduction and income statement, we will now review cash flows. In the next couple of slides, I will talk about Target's cash flow trends when reviewing operating, investing, and financing cash flows. Cash flows from operating activities help companies to see the increase and decrease of their cash revenue. With Target, we can see here that the operating cash flows have increased steadily from fiscal year 20 to fiscal year 22, from $3,281 billion to $6,946 billion. At the very bottom, under changes in operating accounts, we can see that the cash provided by operating activities have decreased by $1.9 billion from the prior year, but still an increase from 2020. When it comes to investing activities, reviewing this is important because this can help determine the company's financial future. For Target's cash flow of investment, we can see in the report that its investment trends fluctuate minimally with an overall increase from fiscal year 20 to fiscal year 22. The last step in cash flows that I will be reviewing is the cash flows from financing activities. Target's financing activities fluctuate from fiscal year 20 to fiscal year 22. As we can see in this report, the ending balances show an increase of over $3 billion from year 2020, but still a decrease of $3 billion from year 2021 to 2022. Fiscal year 20 shows an ending balance of $2,577 billion, increasing drastically in fiscal year 21 up to $8,511 billion, with a slight drop in fiscal year 22 down to $5,911 billion. Now that we have discussed the cash flow trends for Target, I will be reviewing Target's ratio analysis over these next few slides. I will be discussing the key conclusions drawn from Target's last 3 years in comparison to its competitors, Walmart and Amazon. Let's take a look at the liquidity analysis. According to Target's ratio analysis of liquidity, the company seems to do a good job at staying above the industry averages. Although each fiscal year fluctuates and shows a slight decrease from the most recent year, Target's ratios have stayed above Walmart's, but is falling behind from Amazon. In years 2020 through 2022, Target's current ratio has stayed above the average of 0.83, and its quick ratio has stayed above the average of 0.05. Regarding the leverage ratio analysis, Target continues to stay above the industry average in some areas. The debt to total asset ratio average is 0.31, and we can see here that Target fluctuates from 1.12 to 1.01. These results show that Target has surpassed Amazon, but seems to be behind Walmart by 0.07. Let's look at the debt to equity ratio. The industry average was 1.67, so although Target's debt to equity is not quite at the average, it is still above those of Walmart and Amazon and shows a steady increase. The long-term debt to equity ratio average is 1.29, so again, although Target is not at the industry average, it is still staying above its competitors and showing an increase there as well. The last ratio on the slide is the times interest earned ratio. As can be seen, the average ratio is 13.5, and we can see here that in fiscal year 20 and 21, Target is below the average, but in fiscal year 22, there is a huge increase where Target is above the average. Now I will discuss the activity ratio analysis. Target's inventory turnover falls below the average of 6.09 and is decreasing steadily over the years. Its fixed asset turnover is staying above the industry average as well as above its competitors, but fluctuating slightly with a decrease from fiscal year 20. Target's total asset turnover also fluctuates with a slight decrease and is below the industry average but above the ratio to Amazon. Its accounts receivables have an overall decrease and fall below its competitors. And lastly, the average collection period. Target starts off below its competitor, Amazon, in 2020, but surpasses it in fiscal year 21 and 22. The last ratio analysis that I will be discussing is profitability. The gross profit margin ratio is below average, but continues to stay steady throughout each fiscal year. Its operating profit margins are well above the industry averages, with a jump in 2022 at 11.93. Target's net profit shows a slight decrease, but is staying pretty consistent while above average. The ROA and ROE both show a steady increase year over year and is above that of Walmart and Amazon, while the earnings per share also shows a steady increase, jumping drastically in 2022. Lastly, Target's price-earning ratio has declined year by year, but overall, its profitability ratio is higher than that of its competition. I will now discuss the market valuations. In 2020, Target repurchased $1.77 billion of unsecured debt at a market value of $2.25 billion and has a current market value of $71 billion. Target stock price trends decreased by 35.52% in fiscal year 22. Every company has a list of strengths and weaknesses, so I will discuss Target's strengths first. As mentioned earlier in this presentation, Target's primary audience are shoppers between the ages of 18 and 44, so they aim to promote products that speak to their primary audience. Along with that, Target offers a variety of merchandise from beauty to baby to fashion. Target also partners with CVS and Starbucks, which brings more people into their stores, and they plan on opening more locations over the next few years as well. All of these factors contribute to a steady growth in revenue. Now that we've discussed Target's strengths, I will now talk about its weaknesses. Target's products tend to be on the pricier side, which can encourage shoppers to go to competitors such as Walmart, which is known for its affordable prices. Another weakness I found upon my research is that Target was a victim of a data breach back in 2014. This breach leaked over 70 million customers' credit card information, which affected Target's reputation negatively. Another weakness of Target is that they do not have locations outside of the United States, which puts them low on internationality, which can lead shoppers to choose a competitor instead. Let's talk about future prospects. Target is projected to continue increasing in revenue and has plans to expand by creating new locations. The company also plans to invest billions of dollars in its growth, as well as follow in the steps of many stores after COVID hit by providing curbside pickup. Target also plans to promote their private brands and speed up deliveries. In this last slide, I will discuss the company's financial position and organizational strategy in relation to a biblical worldview. The Bible does not have a lot to say about writing a financial analysis, but there are many verses that discuss God's feelings towards money and how we should use it. The verse I chose for this presentation is from Proverbs 21:5. It says, "The plans of the diligent lead to profit as surely as haste leads to poverty." While running a business can be very difficult, staying ahead of the game and not rushing to get quick results will lead to the success of a company. Upon my research throughout the project, Target's financial analysis shows that the company has made efforts to stay diligent in planning for its future so that the company can continue to grow. Although Target has had some issues throughout the years, it continues to push further and not give up. This is the end of my presentation. Thank you for watching and have a blessed day.